Yo, what's going on, you guys? Welcome back to Millennial Hustlers. Today we're going to be talking about 3 stocks that you do not want to miss out on, so make sure that you guys stay tuned until the end. There's a lot of valuable information in here that you guys are not going to want to miss out on. But first, if you guys aren't already a part of the Discord channel, make sure that you guys click the link down below. I talk about all my buy orders, sell orders, watch lists, market news, and all things stocks. So if that sounds like something interesting to you guys, make sure you guys check it out, and let's get into it. Okay, so without further ado, the first stock that we're going to be talking about is Palantir. Now, 11 days ago, Palantir was all the way up at $38 a share. Since then, it has had a 6-day losing streak down over 36% due to some news that we talked about actually last week, which was a shareholder lockup expiration, meaning that the people who were allotted shares that were a part of the company were now able to sell the shares if they wanted to. This created a huge buying opportunity. As you guys can see, it was down to $25 a share, which is crazy. But on Friday, the stock bounced from $25 a share all the way up to $29 a share, which was a great bounce. Now let's talk fundamentals. Okay, so briefly, Palantir is a data analytics company largely working for the government, but has now since expanded into commercial contracts. Now they have 3 types of products. They have Gotham, which is essentially meant for government institutions. They now have Apollo, which we're not going to be covering as much today. And then what we're really going to be focusing on is Foundry. Now, Foundry is the commercial contract that they have for large institutions. Now, what they can do for these large institutions is they can collect data from all different types of platforms and basically create what they call an ocean of data. So then they're able to use this ocean of data along with their advanced AI software to backtest as well as predict various scenarios based on live information coming into that database. An example of this is the US Army that actually uses Palantir for strategizing. They get intel or various types of data, they interpret it, the AI actually projects different types of scenarios, and based on those, it picks the one with the least amount of risk and the most amount of upside. So basically, the AI uses a complex analysis of the data to improve risk management and decrease overall risk based off the data that they're given and the AI's predictions. So there's a ton of different industries that use Palantir, all the way from automotive to oil and gas, renewable energy, transportation, you name it. These big companies are using this software and the AI to predict their future outcomes and reduce risk management, especially with things like oil and gas and commodities. It's very important and it's very useful. One of the most notable ways that Palantir has used their technology recently is with tracking of the virus, its spread, the news that's coming out, doing due diligence on that news. It can do all of it. It's quite impressive, and they have been able to track and reduce overall costs incurred for all these companies by over $500 million, which is pretty incredible. Okay, so now why do I believe in this company long term? Basically, this company is able to use all different types of data and integrate them and interpret them without nearly any human intervention, which is pretty incredible in and of itself and is quite a unique capability of Palantir Technologies. Also, they're able to access all different types of cloud systems, whether hybrid, standalone, or integrated cloud systems, and interpret all of their data as well simultaneously, which means that you can update live from multiple different sites, which also adds huge value to this. Lastly, the company is vertically integrated, meaning that they do data collection, AI modeling, sorting, and visualizations, which is super important. So in 2020, they were 56% of contracts were from the government and 44% of the contracts were from commercial. Now this is over 22% year over year growth for commercial contracts, which is great. Now their Q4 earnings did not perform exactly how we expected. However, they have 21 pending contracts that have yet to be claimed in their financial earnings report. Now this means that there is big earnings to come in the near future. Another thing that's super important to note is that although their commercial sector is growing, they are largely based in the US, boasting over 107% growth year over year with commercial contracts in the US. Now, why this is so important is because internationally, there is just such a large opportunity of untapped potential that this really has opportunity to grow into. Now, they currently supply 8 of the Fortune 100 companies. They also supply 12 of the Global 100 companies. And I say this because they account for less than 5% of global markets, which means that they have a huge opportunity to grow, like I was saying. Another super important thing to note is that the average cost per customer increased 41% year over year, meaning that the people that are already owning Palantir Technologies software are actually increasing their contract size to adopt different technologies that Palantir offers. This is huge. This means that these companies believe and love what they're getting from Palantir. Currently, there's only 6% short interest. Their market cap is around $43 billion and their PE ratio is 160. Okay, so now that we have the technicals and the fundamentals out of the way, it's time to get my price predictions as well as where I'm gonna be buying and selling. They indicated that they're expecting a revenue of $4 billion by 2025. Now, in order for this to happen, this means that they would have to have a 29.7% compounded annual growth rate. Now, I tell all you guys this to say that the stock should be up over 260% if that scenario comes true by 2025. Now, based off all this research, as well as what I can gather from some of the other analysts' input on this, my price prediction for 2025 is going to be about $80 a share. Now, this is assuming a aggressive PE score of 30. However, currently the PE is at 160, so I feel that this is fair. Now, 5 years from now might not matter to many of you guys. For those that are interested in the short game, by 2021, the end of it, I expect that we're probably going to see somewhere around $43 a share. So if this comes true by the end of 2021 and you're buying now, this could mean that you're up about 30% on your position. However, I'm just some dude on YouTube that does his own research and tries to make money. So make sure that you guys are looking into it as well and do your own due diligence. I always say to not base your strategy or your buying based solely off anyone else's opinion. Okay, so the next one that we're going to be talking about is VXRT. Now, VXRT is something that we've talked about in the past. Recently, they slumped over 70% down from the highs of $25, which is absolutely crazy. This was after their phase 1 clinical trial announcement. Now, since then, the stock has slumped down to $7.50, and we've been accumulating since about $9 a share. Okay, so now remember guys, fundamentals and technicals are both an important aspect of your guys' success as a trader, so let's talk fundamentals. So VXRT is a biotech company located down in San Francisco, and they're focused on oral tablet vaccines. So on the 3rd of February, they reported seemingly negative results for their phase 1 clinical trials. However, it's not what it appears to be at first glance. As you guys can see, it was widely portrayed as a failure of a clinical trial. However, that is just not the case, and we're gonna get into why that is now. So it's really important to understand what a phase 1 clinical trial even is. A phase 1 clinical trial mainly focuses on the safety of the dosage. Now, efficacy is only reported as exploratory results, meaning that it's not definitive or conclusive, so keep that in mind. Okay, so if safety is the main goal, then what happened? Well, it actually appears that safety was fine. They actually did well, as you guys can see here. Now, regarding the efficacy, the vaccine actually triggered multiple immune responses. These included T-cell responses to the viral spike protein, increase in plasma blast cell number, increase in pro-inflammatory cytokines, but neutralizing antibodies were not detected in serum, and IgG responses were not detected in most subjects. So we're going to touch on that in a second, but real quick, Dr. Tucker, who is the CEO of VXRT, said that their oral vaccine will actually be less affected by new variants in comparison to the shot version of the vaccine. Okay, so why did this huge sell-off occur? Well, based on the research that I've done, I think that the sell-off occurred for 2 reasons. First, it was probably due to a headline-driven sell-off. Many retail investors sell based off of the headlines and then do their research afterwards, unfortunately, and this can lead to pretty devastating problems. Secondly, this could be due to what is known as a IV crush or implied volatility crush. So if you guys are new here to the market, usually this happens on pre-anticipatory runs. So briefly, an IV crush happens when the extrinsic value of an option contract makes a sharp decline following the occurrence of a significant event causing a large correction in the option chain. Okay, so basically to boil it all down, why it matters for you is that prior to these big, highly anticipated events, the stock usually runs up, and then if it doesn't meet expectations, or even sometimes if it does meet expectations, there's a sharp sell-off before resuming the momentum in the direction that it was meant to go. If it was a good reaction or a good trial, then it'll usually continue back up. If it was a bad one, it might get beat down pretty bad. Okay, so returning to my main point, this huge sell-off that was caused by an IV crush just presents a huge buying opportunity in my opinion, and here's why. So the reason that I'm less worried about this huge sell-off is twofold. First off, a phase 1 clinical trial, like I said, is meant to be just about safety. It doesn't really note on the efficacy of the data. That's something that we really expect to see in the phase 2 clinical trials. And secondly, the presence of the neutralizing antibodies or the lack thereof is not a direct indication of whether that oral vaccine was actually successful or not. Now you might be like, what the heck? Aren't neutralizing antibodies what is responsible for stopping the spread of the virus? And I'm going to take you guys to an example for that. With VXRT, they actually created a oral influenza vaccine, and they showed much lower levels of the neutralizing antibodies in their patients. However, they still had a statistically significant reduction in the symptoms of the people who got the virus in the first place. Now, I say all this and try to keep the immunology as simple as possible to say that phase 2 clinical trials may actually go well. A lot of the headlines are just misleading, and they don't fully understand the detail and the depth of what's actually going on behind the scenes. And I think this creates a huge buying opportunity for us and gives us an edge on the market, which is super important to be successful. Okay, so enough about all of that. Let's talk about where I'm buying, where I'm selling, and what my price projections are. Okay, so Monday in the after hour session, VXRT has an unconfirmed earnings report time at 2 p.m. Pacific Standard. Now, personally, if you guys are not yet invested in this stock, I would wait until after the earnings. You have nothing to lose. Sure, the stock could go up a little bit, but that would just give you more conviction and more confidence in the fundamental backing behind it. And you also are eliminating some of that risk that could be associated if they miss earnings. Okay, so now for my buy target. I personally think that under $8, this is a fantastic buy. There's not that much downside, but there's a huge opportunity for catalysts and upside in the near future with the known phase 2 clinical trials coming up. I think that there's a lot of good things going for it, and it has a great opportunity to continue to run. Now, long term, the valuation of this stock largely depends on the success of these clinical trials, which is why you see such a big swing in the stock. So go in understanding that it is a speculative biotech play. However, if you stay informed, hopefully you can make these decisions as we work through it and as these results come out. Okay, so the last one that we're going to be talking about today is NEO. Now, NEO has been brutally beat down from $65 a share, like maybe 2 weeks ago, now to $55 a share. This is a huge buying opportunity in my opinion, and I'll say why, so stay tuned. Okay, so real quick, the fundamentals. NEO is an electric car company that has autonomous capabilities and is based out of China. Some really important numbers for you guys to remember is that in 2020, they delivered over 47,000 vehicles, which is pretty incredible. Now in January alone, they delivered over 5,000 vehicles, keeping that trajectory for a really positive 2021 delivery schedule. In September, they released their new model, the EC6, and they're expected in Q1 of 2021 now to be releasing their first sedan, the ET7. So this new vehicle is going to include capabilities for autonomy, meaning full self-driving capabilities. These are provided by Qualcomm as well as NVIDIA, and they're mainly focusing on a luxury market with direct competition to the Tesla Model 3. Okay, so enough about the technicals, enough about the fundamentals. Let's talk buy targets. So for me, I have been averaging up, and currently I'm at about $40 a share for my average price. I'm definitely looking to add on this dip. I see this as a huge buying opportunity. I think that long term, this stock has so much value and so much opportunity to scale, especially with China pushing that company and funding that company in the background. They want that company to succeed. And when the wind is at your sails, the money's in your pocket. Now, something really important to note that you guys should make sure that you have in your calendars is that March 1st, NEO is announcing their earnings. I see this as the perfect storm. They're beat down, they have good fundamental value, and they have upcoming earnings, which means a catalyst that is going to drive it, hopefully in the pre-anticipatory run that we're all expecting. I also think that they're probably going to kill earnings like they have been over the past year. So we have a lot of good reason to expect for this stock to go up in the near future. Okay, so some really important things for you guys to remember is to watch out for the margin, for the big boys out there that are playing long. For the people that are playing technically, I think that this is a great dip entry, like I said, and you could probably sell like just the anticipatory run up to earnings and then take your cash out, maybe take 50% because I think they'll probably do well afterwards. So you might get an even better bump after their earnings come out, and then you could probably take profit there. But for the long term, guys, I think that this is a great buy price for the next year or two, and it definitely is something to look out for. If it goes under 50 in that like $40 to $50 range, that is a very heavy buy price. That's where I'm currently at right now, is $40 a share. So make sure that you guys keep your eyes peeled, set your alerts above and below if you guys are waiting to get in on confirmation. And that's it. So that wraps up our stock talk. Make sure that you guys add all those to your watch list, that you're watching them closely. I hope that this was a helpful video for you guys and that you guys appreciate the research and the time that I took to put into this. Make sure that you guys turn on the notification bell, hit subscribe, like the video if you guys appreciated the time and effort that I took to put into this. Make sure that you guys share this video with anyone else that's interested in the stock market. And if so, hit that Discord link down below. And stay tuned. We're going to be talking about everything that I'm buying and selling in there. So it is a great opportunity to stay up to date. And with that being said, I appreciate you guys. I appreciate you guys sticking it out all the way to the end here with me. And I'll see you guys next week on next week's Sunday Stock Talk. Peace.